Alright traders, Mark here. Today is Thursday, January 4th. We've had a very active start to the year this year. I've got a handful of trades. So I want to start off with just going through the trades we talked about last night that set up. So the New Zealand dollar, Canadian dollar. We talked about this last night in the video. It's set up here at 88.88. Now, I did mention that on the daily, I am trading directly into, and blow this thing up a little bit so you can see it better. I was trading directly into the 10-period moving average as well as a sell zone. But if you go back and look at the video, one thing that I did say is I have confluence with the weekly moving average, so I did like this trade. Now, here's one thing that I am really excited to test, and over the weekend I'm going to build a spreadsheet which will allow me to test and analyze the metrics that I want to look at. And guys, once I start this back test, whoever registers to kind of follow along as I build the system, I'm going to give you the spreadsheet for free. It'll just be my little gift to you for just taking your time to watch the videos. Because I know, especially when it comes to back testing, gang, this can be pretty dry stuff. But if you're interested in building a system and learning how to analyze the data, this is for you. So we can look at this trade in two ways. One, typically what I'm doing is I'm using a 20 pip stop and a 100 pip target. But if we look at the ATR on this specific trade, let's go back to this bar. The ATR is 0.0013. So if I'm using an ATR stop, I'm going to have a 13 pip stop here. So 88 minus 13 is going to put me down at 75, which is down here. So you can see price did not make it to 75. Now, on a 13 pip stop, I'm looking at about be a 65 pip target. Target would have been hit right up here around 52, 53. If I were going for a 100 pip target here, I'd still be in this trade, so I'd still be carrying the risk. But I can make the same amount of money. Just because I'm going for 100 pips versus 65 doesn't mean I'm going to make less. Because think about what we're doing here, gang. I want you to start thinking of yourself in terms of a risk manager versus a trader. So you are managing risk. You have a portfolio of dollars that you worked hard to build. It is your job to manage the risk in that portfolio. Okay, it means you don't have to take every trade. It means you need to figure out a formula that does not over leverage the account. So if I want to risk 1.5% per trade, it's just a quick, easy formula where I just take the account balance, divide it by to multiply it by the 0.015 for the 1.5%, and that gives me a risk parameter. Once I have that risk parameter, it's going to tell me how many contracts to trade, and that will automatically set that upper target. So if I'm, if I want to make 100 pips a trade, and I'm trying to make $100, well, you're going to end up with some kind of a multiple. Now I realize on forex accounts you can't. I don't think you can do like 15,000. I'm not even sure if they're called shares or contracts or whatever the hell you call them, but you might have to either bump that up to 20,000 or bump it down to 10. So regardless, you have that discretion. Anyway, so I consider this target hit based on the ATR, not hit based on 100. Let's look at some other ones. The dollar yen. So let's see, this one also set up for a long. And this one had a handful of things that were against it. Now here's how it's set up. This is the zone inside the zone, right? Now not only that, but I also actually end up having an L24 print here. So the entry here would have been 12.52. Now in this one, if we look at the ATR, it's 0.09, so it's 10. I'm going to round that up to 10. So I'd be looking for a 50 pip move. So I'd be looking for a move up to 113.02. Now you can see I was trading directly into the 10-period moving average on the weekly and the daily, and a sell zone on the weekly. So I had a handful of things that were wrong with this trade, but we'll still follow it and see. This is not one that I took. All right, pound dollar. That is not the pound dollar. Pound dollar. Okay, pound dollar. This was again a zone inside the zone, and as I mentioned, that daily moving average is going to continue to creep up higher, and it is. So my entry here, 1356. The ATR on this one is 13. So right now you can see it did react here on this zone, but right now it acts like it wants to head higher. And you can see we're clearly in an uptrend. So this is one thing I'm also going to add into my filters for my back test. My trend ID, daily and weekly, it's both green. Okay. All right, Swiss yen. This one set up today. Actually, it's set up just overnight. Right here. Here's your entry. I mean, that is beautiful, guys. Look at this entry here. At 16. ATR is 9. If you're going on with an ATR stop and target, your target has already been hit. And now in this one, I have confluence with the daily moving average. I am above my weekly moving average, and I am green on both the daily and weekly trend ID. Okay, and I am inside of a sell zone, but the top of the sell zone wasn't until up here, right? And I'm also trading into a daily sell zone. So again, this is where we have to do our testing and see what do these look like. You actually had no, you know what? This is not a fresh zone down here. Never mind. I would not have taken that trade. All right, Euro Aussie. This one set up today. L24 again. This one is trading into both moving average on the weekly and daily, but your entry here is going to be 54. You have the ATR is 21. Actually, at time of entry it was 23.3, which would put me at 41. No, I'm sorry, 31. Which would still have me in the trade. If I were using a 20 pip stop here, I'd be out of this trade. Now, another thing that if we look at the weekly right here, am I really trading into the weekly moving average? Actually, my weekly moving average is completely flat, and I haven't closed below it yet on the weekly. I'm just closing at it. So we're really not trading into it yet, but we are trading into the daily. And the last one is a euro pound. Where'd it go? Jeez, I couldn't see it. Okay. So I have a zone inside. I have an hourly zone inside of a weekly zone. My entry is going to be 88.88. The ATR at this point in time was 7. So that would put me at 81. So if I were using an ATR stop and target, I would have been stopped out, and I would have re-entered at 81. So if I were going for 35 pips, which would be the 7 times 5, well, I really should be able to do this math in my head. Target would have been hit already. So 81 to 23 is going to give me over 35. So it gives me actually over 40. So you can see if I were using ATR, stop, and target, I'm already out of this trade. Now let's look at this trade. So I am above both the 10-period moving average on the daily and weekly. I'm bullish on my daily trend direction, but I am trading into a daily sell zone. So really what I'm doing here, guys, is trying to figure out what type of filters I want to test against. Hold on, I want to make a note. Okay. All right, guys, that's it. So the handful of things that are set up. What do y'all think at this point? What's taking shape in your mind? I want you to really think about the system so far. The ATR is no question the way to trade this. It's no different than on my day trading on the NASDAQ, which I want to show you that just real quick today. Real quick. Now, I only took one trade on this today. I've seen this type of a day before. Look how freaking ugly these charts are. But look how gorgeous these zones are. How these zones just encapsulated price. The only trade I took today, I had a pattern set up right here and I took this along. That's the only trade I took today. Now, if I were trading with my system rules today, I would have had 8 trades and 8 losers. But this is where knowing what kind of day you have really comes in. We never broke out of this range. All right, gang, enjoy the rest of your night. I'll catch you tomorrow.